post.
Okay, cool. Right, it is now past. The recording has started. I will start the webinar now. So good luck, Andrea. Let's get going.
Cool.
And I suppose once we've done the intro, you can then kick in sharing your screen or whichever you like, or if you want to start it with the screen on, it's up to you on that.
I don't mind. They don't see me when I share the screen, do they?
No, we lose you. We lose you when you share the screen. Yeah, exactly. Good afternoon, everyone. We've got people joining. Excellent. Great to see you coming on board. I'm always nosy, so I always jump on and have a look at the names as well. Lovely seeing some recognizable names that we have joining as well. Awesome. Looking forward to this session. Really looking forward to it. I was just catching up with Andrea whilst we're waiting for people to join and talking about the journey that CHL have been on, which is truly an amazing journey and an exciting one with these new products that you guys have been launching over the period, or lending lines, should I say, you've been launching. So really excited to delve into some of that today and discover more for the brokers, which should be good. It should be good. We've got 3 polls today as well, so we'll get everyone involved in the polls. Make sure you do answer those and give us your feedback. You know, I always say these sessions are only as good as the audience allow them to be. So be interactive, join in the polls, send us your Q&As as well. We've got some great questions already lined up from registration, so don't be shy, join it as well to ask anything that comes to mind. And I'm sure Andrea will be more than happy to take us over those answers. Give it just a little more time and then I will kind of properly get us going. We've got a poll coming up quite early on in the session as well today. So we will wait for the numbers to go up so we can get the maximum out of that for you as well, Andrea.
Perfect.
And as everyone's coming in, excellent stuff. But good afternoon, everyone that is joining us today. Lovely to have you with us. Lovely to have you all on board today. Just a reminder for you about the free trials that you can start with us. Hannah will be showing some details on that a little later, but you can start a 30-day free trial with us at www.knowledgebank.co/join. But we'll share that detail with you a little later. For those of you that don't know me yet, my name is Chawatama, and I'm the sales director here at Knowledge Bank. And today I'm joined by Andrea Gizzy, who is the business development manager at CHL. Good afternoon, Andrea. How are you doing?
I'm doing really well, thank you. How about you?
Yeah, not bad at all. Now, like I say, it's CHL that will be joining us today, and yeah, they've introduced or reintroduced the Buy-to-Let Refurbishment Product Range, which is designed to help landlords improve the energy efficiency rating of their rental stock, or improve the general conditions of their property as well. Now, the products offer the ability to release the value of the costs of the refurbishment upon completion without having to change product. So it's a real USP and a really fantastic proposition that they'll have and they'll be able to discuss with us. Other aspects of our CHL, I mean, they have a flexible criteria, they have dedicated case managers and can provide solutions to complex customers, offering bespoke underwriting to meet the needs of both domestic and of your domestic clients, sorry. So it's going to be a really good session discussing all of this and looking to see what we can unlock in terms of potential CHL can do for you. Like I mentioned, we do have some poll questions that we'll ask during the session. We do also have a live Q&A, so do get involved within that. Send through your questions as and when they pop to your mind. Don't wait until the end. Send them in as and when they pop to your mind. Then we'll go through those a little later on in the session today. But that's how the session will run. So, Andrew, if you want to share your screen, and then I will get our first poll ready for us as well, and we can get that going.
Right, can you see that?
Yep, I've got you there, which is perfect, and I've still got you in the corner of my screen as well, so you are still there for all to see.
No pulling faces at you then.
Exactly.
Okay, so quick introduction. Obviously, as Shane said, I'm Andrea Gizzy and I'm one of the business development managers here at CHL Mortgages. We've had an exciting ride since we relaunched back in 2021, where we've now doubled our offerings out into the market. So today we thought it'd be really relevant for you guys to obviously talk about our refurbishment buy-to-let products. that we have. So it is a good opportunity to start off, as we said, with our first poll question, which would be finding out what recommendations for funding do you have for your clients looking to finance an unlettable property?
Yeah, exactly that. So it is, what funding recommendation do you most often make to clients looking at finance of an unlettable property? And the options that you have are short-term, so bridging, you've got a term mortgage, additional borrowing on existing properties, personal funds, and then unsecured loans as well. So I'll launch that poll now. And like we say, if you can get involved, get your answers back into us, and then yeah, we'll be able to kind of let that guide the conversation as we go. Superb stuff. Really appreciate that. Got a lot of the answers coming in, so really appreciate that involvement and interaction. And it's interesting seeing these results as they're coming in. Actually, having some broker experience myself, it's probably going in line with, yeah, certainly the way that I would recommend, or the way that I would move things along. Final few seconds now, I'll give it a little more time. Still a handful that haven't sent over. If you want to pop an answer in, what funding recommendation do you most often make to clients looking to finance an unlettable property? Okay, I'll end that poll now. So the results are in over there. And the answers that we have on there. So short term, so bridging has come in with a whopping 76% of the entrants have used that option. Additional borrowing on existing properties comes in second with 16%. We've then got unsecured loans at 6%, and then a term mortgage was the lowest one there.
Perfect. Okay, so that probably ties in with some of the research we did, obviously looking at the market and what was on offer. So obviously currently it seems to be a two-step process. So, you know, you're doing the short-term funding, they're carrying out the works on the property, and then you're looking to exit it. So what we did is we're now offering an alternative for you guys. So this would be one single term mortgage, okay, that allows the landlord to purchase or remortgage, because it's open for remortgages as well as purchases, their buy-to-let property, to refurb them, okay, and then we can release up to 70% of the new value. So the biggest question I always get asked is, how does it work? Okay, so our process is quite simple. You get the first initial mortgage advance that's released. So on application, obviously you guys are going to fill out a very detailed, your client's going to fill out a very detailed schedule of works that you'll find on our website under our document section. You have some evidence supporting that, of like experience for the people carrying out the works, evidence of how they're going to fund the works initially, you know, and all the rest of it. And that's all going to go to the valuer when they go out there. The valuer, when he goes and sees the property, he's going to give us two values. Okay, he's going to give us a now value, pre-works, and then the afterworks value, okay, together with the afterworks rental, which is great for us because when we're doing the underwrite, we're going to do everything on the afterworks value, okay, using the calculation of the for the max loan of the rental for the postworks. Then what will happen is, obviously we release on the initial release up to 70% of the pre-works value. And then the difference between that and obviously what we know we can achieve on the max loan is held as a retention. Okay, your client then has 3 months to complete the works. Okay, they let us know when to reinspect. All right, the cost of the reinspection is already included in the original valuation fee, so it's no extra cost to your client whatsoever. The same valuer goes out there, confirms that yes, they've done everything to what they stated on their schedule of works, and then we release the retention. It's as simple as that. So it's literally one application, one set of fees, one set of legals for your client. Okay, and then as I said, it's the retention that we release later on after they've done the works. So what can they kind of do under this refurbishment product? So we have 3 products within this range. The first one will be obviously the light refurbishment one. So this is where we can do anything that's non-structural, okay? it can be signed off under the builder's competency scheme. So you can replace all your bathrooms, you can replace kitchens, full rewiring, and you can even change it from a single dwelling to a small HMO. Okay, as long as all the planning is in place on application, okay, for when we're doing the first completion, you know, then the application for the licensing and everything will be in them place as we would do normally on a HMO application as a purchase. Best thing about this one is just remember it does not need to be lettable, okay, at this point of the initial mortgage advance. So, you know, in those instances, this opens up the doors for a lot of properties that are currently out there. It's a good stance to do, as I say, because you will get clients out there that don't like the short-term lending. So this is a great alternative for you to obviously bring out in there. This brings me on to then the second poll question, Shane, if you can go through this one, because I think from the feedback that we receive from maybe now tenants looking to rent properties on what they tending to prioritize as, you know, what they're looking for in properties is a good one to cover.
Yeah, no, certainly we'll go into that. We had a question come in, which answered within that, which is just asking, do you have to release the retention funds once the works have been completed? And yeah, taken by your process over there, it looks like that is the case, that it is only once works are completed, the money is then released at that stage.
It is, yeah. I mean, you do have some clients, you know, that don't actually want to pull any extra money out of the property. You know, so in those cases, we've kind of like maybe held a retention to cover the cost of works, you know, and we'll release the cost of works back to them, but they're not actually pulling any extra equity out of the property of the afterworks value. So it can work for what different clients needs, you know.
Yeah. Excellent stuff. And then my own question, to be cheeky on this one, Andrea, so again, this is something that used to come up for me as a broker. From time to time, you'll get either those that are experienced at doing this, so I've done it before, I've got a few properties I've done in this way, and they might have almost a CV. So they might be keen to show their property and to show the works that they're going to get to the high-end finish, shall I say. They might want to share that with the lender and then also the valuer. In instances, do you think that helps? Would you support brokers getting that kind of detail? So if they've done it before, some pictures of past properties that they've held, do you think this helps you guys in assessing and being confident,
100%.
but then also the valuer?
Yes, no, it helps us all out, because anything that you give us, we will be providing to the valuer to do his assessment, you know, and it's things that we're looking at. And I think the key is, if you've got someone like you've just described, the ideal person who's done this before, got a lot of experience, maybe got their own team, you know, behind them that carries out all this works, we know it can be done quickly, because, you know, 3 months is not an extensive period of time, you know. So we need people who really do know what they're doing, or they've got or they're employing builders and contractors who have that level of experience of doing that, which is why you'll find some of our schedule of works and stuff will ask for evidence of the builder's experience and stuff, because we're doing that as part of the underwriting. So yeah, we're good at this. We used to do it before pre-credit crunch, so you know, we've got the experience in the office of how well to do it, and yeah, the valuers are on board, and they know the more detail you can give them, you know, the better evaluation they can do. So.
Yeah, no, perfect. Thanks for that. And like you say, poll question number 2 that'll come out to you. It's like, say, great engagement on that first one. Let's see if we can do it again this time. But this question is asking, from the feedback you receive, what do tenants consider as the most important factor before renting? Okay, so from the feedback you receive, what do tenants consider as the most important factor before renting? Options being parking, location, EPC rating, furnished, and then any smart features as well. Those are your options. But if you want to go ahead and get involved in that poll, that would be great. And again, thank you for that. We've got great numbers coming in over here. Very, very heavily weighted on one particular answer over here, which I don't think would be a surprise for us. Give it just a couple more moments. And this is the second poll question, second out of 3 that we'll be doing today. We've got some great questions coming in on the Q&A as well. So like we say, we'll try and keep those for later. I do keep an eye on it. And if anything is on something Andrea's mentioned, then I will go over, but otherwise we'll look to keep those for the back end of the session. Okay, so the results, I will just end that poll now. And like I say, heavily weighted on 1, but it is location. So 87% have gone with location, 2% have gone with parking, and then 6% each have gone with EPC rating and furnished. No one looking at smart features, it appears.
Wow. Okay. Interesting. No surprise, but what feedback, the reason I asked this question, because the feedback I'm getting when I'm out and about speaking to brokers, that I think the EPC rating is becoming more of a priority these days. Now, there's different ways of looking at this. It could be cost of living. Obviously, we know that's increased immensely, and it's something that people are a bit more conscious of. But other things that is coming more relevant is the younger renters, so the first-time renters. They're kind of thinking more for the environment. And the carbon footprints and how we're moving forward as a nation, you know, our promises to better that, you know, everything around the environment. So it is becoming more of a priority these days. So it might be a case that, you know, they will pick an EPC if they had to move just a bit further out, you know. So it's something to obviously bear in mind. For landlords especially, because, you know, EPC is becoming a hot topic of conversation. Now, this is some information that I was looking at the government's website for the Department of Levelling Up Housing and Communities, and it's quite interesting, the statistics they've got. Now, these are all registered properties from Q4 from 2008. Now, the darker colours show obviously lower than the C rating, and obviously the lighter the color, you're going to get the more of the C rating. But you can see there, you know, only 41% of the properties that are registered currently has an EPC of a C and above. Okay, so that leaves there's like an awful lot of properties out there that possibly do need to obviously increase their EPC ratings, not just for cost of living, but for the environment and the carbon footprint and everything else. And obviously you've got the government guidelines that they're highly discussing, but we'll touch on that a bit later. But what we did in part of our light refurbishment product range is we've got an EPC improvement range, which is a great opportunity again for your landlords when they're looking at their properties. And always remember, this is for remortgages as well as purchases. Okay, so they could be looking at the current portfolio going, I need to increase this, you know, I need to better the EPC. So, you know, they may be looking at to improve the insulation. You know, it could be the heating and the hot water system, simply replacing the windows, rewiring. You know, there's a whole lot of realms that you can do when it comes to it. You know, it could be even as simple as replacing the light bulbs to LED light bulbs. There's a whole different estimate that could improve these. Now, again, you know, this product range is great because it covers all the rest of the works that the light refurbishment one does. So if you're doing the bathrooms, the kitchens, you know, or all the rest of it as well, but you know the end result of the EPC is going to be a C and above, then the EPC improvement product is the one you want to be selecting for your client. Okay, so you've got that element that we're covering off. And then our third one that we've got in our range is the cosmetic improvement range. Now, this property, I will always state, has to be in a lettable condition when we do the first completion. But this is for properties that just need that facelift, you know, that lick of paint, new carpets, flooring, that kind of thing. Okay, so that's where this one comes into its own. It's a little minor repairs. Now, you could argue that would it increase the value significantly? Probably not as much as obviously the other ones because you're doing a bit more extensive work. But remember, rental is key in this current market that we're in. So this will increase your rental that you can achieve. and obviously increase your max loan that you can have. So this is the one that people might be using for those tired properties that they're just purchasing, but they want to maximize their loan, you know, at the end result. There are some works we can't accept on this product range, as I said. So things like where we can't get the planning in place, you know, on the initial completion of the advance. Anything that requires building control sign off. So all the works we do is under the competency person scheme that you have. We can't do anything structural or anything ongoing that's structural. All right. So there's a few things in there just to bear in mind. Obviously, but that, you know, for properties that requires more extensive work, or your client wants to do more extensive work to the property, maybe they want to, you know, do the loft conversion that touches the roof void, because we can consider changing the loft into a habitable room, but we can't touch the roof void. Do you see what I mean? So there's different things on those elements between them, or they might just want to extend it. Okay, so that's where this product is not going to cover those type of things, but that's where you will be. You know, that first question, you know, 76% of you will recommend short-term bridging kind of finance anyway. So you would always need to exit those ones. So that's one thing I always touch on, is day one remortgages that we're very good with, you know, because we will remortgage in the first 6 months of ownership. If they've done works to the property, we will work off the higher value in the first 6 months. You can capital raise, so we're not just covering the cost of works there. And we'll work from the TL1 document, which means we're a lot quicker to get your client off the short-term funding. So we're kind of covering all bases when your clients are looking to obviously refurbish properties and do things what they require, so they're not being restrictive. So you've got that element that we have. Obviously, we did touch on rentals. So one thing I would always caveat is that something we did launch this year. We're very good at evolving our criteria, and you will see us evolving in time. But blended ICRs, you know, it's all about the max loan for your client at the moment. You know, so blended ICRs will work if the property is going to be mortgaged in their own name, or they're remortgaging it in their own name, and you've got multiple applicants where you've got some are a higher rate, some are a lower rate taxpayer. We will blend the ICR if they're joint tenants, you know, 50-50. So it kind of blends about 132.5%. If you've got tenants in common, they may split the ownership, you know, to who owns what. So you could have 1% in the higher rate, 99% to the basic rate. Our blended ICR is smart enough to blend to the ownership split. So we're giving you guys options out there in the market where you can achieve more for your client on that basis. So leads me on to the last and final poll question that we have, which is, obviously we touched on the EPC, and obviously you've got the government guidelines going on. You've got tenants probably looking more and more now for cost of living and all the rest of it. So how many of you guys, you know, are reaching out to your landlords to talk about the forthcoming government EPC requirements and everything that's going on?
Perfect. So that is your question, guys. Let's get involved and see what the answers are. So your options: planning to, doing it, thinking about it, or if you've not even considered it as yet. And we actually have a few questions coming in. So again, guys, keep those questions coming. We will be going through all of these, and hopefully more will come out of it as we go. A question that I'll ask you, well, I suppose actually I'll keep it. I don't want to steal your thunder, actually, on it, Andrea. So I'll hold that one back. But we do have some questions around the EPC that are coming through from those watching us today. So do keep those questions coming. In terms of that poll, some great engagement again over there. A few more left to answer compared to those that answered last time. But we've got a real split over here as well, actually, which is interesting to see. So in terms of the results, if I end that poll now, or last for you coming in still. All right, perfect. So in terms of the results for that one, so question was, are you actively reaching out to your landlords, so to your landlord clients, to talk to them about the forthcoming government EPC requirements? And the highest percentage was planning to, so 41% are planning to. Doing it was 33%, We've got thinking about it at 15% and then not considered it at 11% there.
Interesting. Okay,
Yeah.
so it looks like we're being active, you know,
Yeah.
in this realm, which is great. It's great to hear, because I think we'd be surprised at how many people still don't know about it, you know, and as we always say, knowledge is key. You know, any educational you can give people, it is great. So, you know, the current guidelines, now just bear in mind, it hasn't obviously been passed through government yet, so we haven't got the actual specifics of when and how it's going to be happening. But, you know, they are proposing that is going to start from April 2025, which, let's face it, is not a million miles away, that all properties in the private rental sector will have to have an EPC rating of C and above. You know, that will be phased over 3 years. So they propose then it'll finalise in 2028. Now, as we know, as we said, it hasn't gone through yet, as we say, but you know, it's inevitable. It's kind of one of these things that we are expecting to happen. It's just a case of what dates, you know, will be put in place. But interestingly enough, Mortgage Advice Bureau did a survey which was published recently, and they asked 500 landlords, you know, what they're going to do basically when this comes in. And interestingly enough, 59% of them said they would exit the market with a deadline of 2028 to upgrade the properties, which is quite an interesting figure when you look at it and you think of how many private, you know, I think the statistics that that's out there from Rightmove is like 1 in 5 properties are actually in the private rental sector, you know, so that's a huge number of those landlords they asked. Now, the current rules, obviously, you know, we went through it before with the EPC of E and above, and under the current rules, there are exceptions to be made for the EPC rating, which properties would cost more than 3,500 to bring that up, the EPC to an E and above. Now, the expectation of these new government guidelines is the exceptions will still be in place. However, they are expecting to increase the threshold of 3,500 to 10,000, okay, pounds being spent on a property. And I think they worked out the average to improve some EPC ratings was about £5,000, say, give or take. So that's an awful lot of properties that are fall below the 10,000 benchmark that they're proposing to set. So it is quite prevalent that obviously that you guys are talking to your landlords, and then you've got people like ourselves who have a product out there to help them achieve where they need to be. And part of this survey, it was quite interesting reading that out of the 500 landlords they asked, only 16% of them had sought advice to understand what changes would be most beneficial for them to improve their EPC rating, which is because it's not as simple as we know, just changing the LED light bulbs or putting a smart meter in or anything like that. So there are different elements. So it's quite interesting that only 16% of them had even thought about seeking advice, where, you know, you'd think that would be one of the first things you kind of go into. To understand what you need to do with your property to obviously bring the EPC rating up. But, you know, some figures that we've done since we've launched this product range, in Q4 last year, 18% of our applications were in our refurbishment product range. These landlords spent an average of 24,587 on improvements, which is about 12% of the average pre-works value. It's a good point to say that at this point, the most we can consider is about 25% of the pre-works value when it comes to cost of works on that element. But the improvements increased the post-works value on average at £58,000, which is 22% of the average post-works value. So it can work, you know, it can work for your clients, and it's a good proposition that we have there out on the market, that it's a great alternative, that if you've got clients that don't want to do short-term funding, as said, you have our term product that we have here, which is great. So that's what I had to go through today. I'm sure, Shane, you've got loads of questions that we need to go through, so it'd be good to cover some of those off.
Yeah, definitely. Thank you very much for that. Really, really informative, really interesting. The areas that you guys have covered and taken on over there. Yeah, definitely a few questions to go over. So, and again, please do keep these questions coming as more come to mind, I am sure. But if I just go right to the top of the questions, and there's one that came in and they were asking, yes, so you state the property doesn't need to be lettable, but can it be uninhabitable, i.e. not wind or watertight, or does it need new windows, and it needs new windows and doors?
Well, it has to be, you'd have to go down to the root of how bad the property is. You know, if it's not watertight, I would say that's more probably structural. Do you know what I mean? On that side of it, you know, does it not have a roof on it? You know, those kind of things. You know, you need to look at each property as it is. You're right, it does not have to be lettable. You know, it might not have a kitchen. So on that point, it wouldn't be habitable either. You know, so there's different elements and different levels you'd need to look at. But, you know, any property you come across, run it past your BDM. You know, that's what we're here for. You know, I look at properties with my guys all the time, and then we know which route we need to go.
Yeah, excellent stuff. And that leads on to yeah, another question that we got, which again is around that windows and doors. So you reference it being with the refurb product, sorry, you referenced it being nothing structural, but where do replacing windows and putting in French doors, or replacing a window with French doors, where does that sit for you guys? Because I don't know if it is with, if I'm wrong over here, but some councils might state that you need planning if you are replacing windows, or so they sit in a bit of a funny place. How does that sit with you guys?
Well, it's an interesting one, because you've got to look at, if you're changing an outside wall, and that, you know, an outside wall is going to be structural, you know, on that side. I mean, you do sometimes have different types of windows which are cut, like very large windows. You know, I see them that you could easily put French doors in there and you haven't even touched the brickwork. Do you know what I mean?
Yeah.
They're quite big on those sides, you know, which we can consider under those ones. But you know, doors and windows we cover under our product range. What we don't want to be doing is changing too much of a structural wall, you know, which could have adverse effects or could take longer, because it then comes apparent it causes other issues and all the rest of it.
Yeah, excellent stuff. And by the way, if you're listening and I've asked one of your questions, you've got a follow-up, send it through. You know, we can certainly follow that up as well. Changing up a little bit then. So in terms of the type of applications that you would accept, these particular products, do they work for limited company as well? So is it just same limited company and private name?
Yep. You know, all our product ranges you can put in limited company or other individual name. It's not a problem to us.
Excellent stuff. And then let's see. So again, with this being a purchase product, or product available at purchase as well, will it work for auction? So I believe this will probably come close to maybe covering a couple of aspects, the time on it. So turnaround times, does it move quick enough to work on an auction purchase? And then is there any way of getting the application in early, so that the valuation is done even before the auction date? How does all of that sit for you guys as a purchase option?
Yeah, I mean, we've done one, you know, we've done purchase at auction under our light refurbishment products. Things to always bear in mind is, you know, what are you planning to do with the property? You know, does it need planning permission? That's one thing I would say. You know, with regards to, there's a lot more involved and a lot more paperwork, a lot more detail that we need to go through on this one. Turnaround times is not a problem with us. Currently, we're literally 24, 48 hours, so we can do things quite quickly. But one thing I always stress to you guys, if you're ever going to look at purchases at auction, is that your client, you know as well as I do, they need to provide you with everything. So you are literally giving us everything so we can quickly work the case for you, and then have a good solicitor lined up. Because you know, we know with a deadline, there's nothing but a deadline because we all work to it. But you know, as long as you've got all your ducks in a row, there's no reason why we can't do the auction purchases.
Perfect. Thanks for that. And this one's again, I deem it to be along the same lines when you're looking at auction, because the alternative is often bridging. It's a question that I know BDMs lenders sometimes don't necessarily like to have. So we'll fire away anyway. But the question is, how do your rates compare, or how do your costs compare with bridging, then using a standard buy-to-let as a long-term exit?
Oh, that's a really good question. To be honest with you, that's where you guys come in, because every lender, whether you're short term or whether you're term, products are interchange, they change all the time. We know that because of current things we've been through. It's very hard to say who's better, because we both do very good things on that side of it. But from a cost point of view, I suppose you need to look at fees, the overall interest rates they're charging, but also the processes. Don't forget that, because if you're doing the short-term funding, you've got to think about possibly the cost of 2 applications, 2 lots of conveyancing, all the valuations that go on. Sometimes I know people re-inspect periodically every month, where we just do the 1 re-inspection fee. So there's different elements you've got to look at when you're pricing it. Very hard to answer that question straight away, as you say, because rates change, fees change, elements change along the way. But from this point of view, I think the comfort you have when you are advising on our product, it's literally 1 set of costs. It's 1 fixed rate, that you have on there. So there's different swings and roundabouts, isn't there, when you've got the 2, because they're 2 very different products.
Yeah, they definitely are. They definitely are. And it's obviously within this market, we've got that go-to answer. It's all about your clients' requirements and what's more suitable for them. But more times than not, it might end up being what they're most comfortable with. A lot of people struggle to understand bridging, so sometimes going with this option, they're more comfortable with it and can understand that better.
No, exactly that. It's not who's best at it, it's what's more suitable. It's it's an alternative that we've got out there for you in the market.
Yeah, no, exactly that. And we've got the questions still coming in, so that's excellent. Do keep that going. One of the questions I noted down about the day 1 remo, say it over here. How would you like, or do you need the works to be evidenced? So if you are coming in, so remortgage, someone's bought the property and then they're ready to remortgage, refinance, and pull some money back out based on works they've done, how do you want that evidenced?
Easiest way to evidence is a schedule of work straight away, because we're always going to send our valuer out there to obviously value the property. You can easily get sales particulars of what it looked like before, on that side, and then we know what it looks like now because our valuer's physically gone in there and had a look at it. We do a lot of them, and I don't think I've ever come across barriers when it comes to it, because it's not just a case. Remember, with day 1 remortgages, when you're significantly uplifting a value, sometimes it's not always just works you've done to the property. It may be something simple like extending a lease or creating a lease. It could be different elements around that side, so we'd still work off the higher value that way.
Yeah, but you always need works to be done, something to be done. There's nothing that's almost like distress sale. Again, in this market, on the figures you gave us about X amount wanting to leave, you don't want to get involved.
We don't consider distressed sales, and we'll always, every lender does it, not just us, everyone does. They'll always underwrite the original transaction, because you only bought it within the last 6 months, so they'll want to know how you bought it, where you bought it, how you funded it, and all things like that. It's part of our underwriting. Every lender does it. It's just having, I think, for our point of view, it's the quickness that we can get your clients their own money back, because there's a lot of unencumbered properties bought for cash. Well, they want to get their money back because they want to move on to the next property. So we can do all that for them.
Perfect. Is there a minimum property valuation?
On a standard property, it's 75,000. Okay, if it's something like it's a next local authority property, it'd be 100,000. If it's above and adjacent to commercial, it'd be 150,000, say. So we have different stages, but 75,000 is the crux of it. That's our most minimum value that we have.
Perfect. You kind of answered it in a way, this question, so you might feel you're repeating yourself a little bit, but I think it's an interesting subject to go into again. But question comes in, says, there appears to be growing expectation that the 2025 deadline for EPC C rating will be pushed or changed for a number of reasons. And also there are questions over the reliability and quality of many of the EPCs issued. What or where does CHL stand on this? Is there an opinion that you guys have? Do you believe it will be knocked back at the moment?
You'd love to have a crystal ball, wouldn't you, on that side? You fly on the wall in Parliament. You know, I'll be honest with you, this has been being talked about for a while now, and time's been ticking. And let's face it, their focus has been on other directions and elements in the last 6 months. You know, it wouldn't surprise me if it's pushed back. You know, I don't think it's going to go away. That's my personal opinion. You know, I don't think it's going to go away. I do think it will probably come in at some point. It is the question of when, but nobody can predict it. We have to go by what they say when they pass it through, you know, Parliament on that side.
Yeah, no, it's a really tricky one, isn't it? Because everyone's been a little uneasy, unsure, and it probably adds to one of the stats you came up with, talking about how many clients, the survey done by UK Finance, which we actually covered in Lenders Live a couple of weeks ago, but talking about how many landlords don't know about it or haven't done anything yet, just kind of waiting in a little bit of purgatory around it. But again, just highlights the importance of brokers and the role brokers play in reaching out and initiating the conversation sometimes.
No, 100%. And I think it's not just a case of because the government says you've got to do this, have a think for the tenants, because the tenants are actively looking at it, you know, on that side of it. And if you have a property with a better EPC rating, you know, it is going to be cheaper on the long run. If you're a landlord and you have a HMO, 9 times out of 10, your utility bills are included in the rent. So for your own pocket, you'd want to increase the EPC rating, you know, around those sides. But it is definitely something that is coming more and more prominent, where people are searching for properties. And I suppose you've probably even got to look at the aspect of, if you don't improve it and it's still like an E, or even below that, which we still have come on the market, could it affect the resaleability of your property? You know, that could be a question that landlords need to ask themselves as well, which is a good point, a conversational point for the brokers to have with their landlords.
Yeah, definitely. Another one which has been very, very newsworthy, but this question's coming in. So with the negative publicity in regards to cavity wall insulation, would this still be an acceptable form of work for the EPC refurb? So I think that is the insulation guns that they have and the foam insulation that they have within the roofs as well. So there's a cavity wall insulation, which there's some negative press around, and then in terms of within your roofs as well, there's some spray foam that is available. Technical name escapes me, but how does that sit with CHL?
Yeah, I mean, let's face it, to make your property more greener and more efficient, you have to insulate it. You know, it's one of those things. Different types of insulation that have been used, like the foam insulation, you've hit the nail on the head. You know, that's becoming more of a hot topic of conversation, and that's really around, was it applied properly? And that's because you're having a lot of where works have been carried out and they've literally sprayed the whole inside of the roofs and they've covered all the beams. Now, a roof needs to breathe. You know, the wood needs to breathe because the condensation will build up. And what happens is then your roof beams will then have rot, which is what is the big problem, because it wasn't applied properly in the first place. So there's different elements to look at when you are considering you know, what type of insulation is best for your property. But there are experts out there. You know, you can get reports done and know which way is the best route for you to go, you know, but every house is different, but it has to be done properly.
Yeah, excellent. 3 months max is 3 months the maximum period that you guys will allow for this retention to kind of sit, or for the works to be done, and this is with the thought of HMOs in mind. So sometimes planning might take a little bit longer for an HMO property to come through. How would that sit if it was an HMO property? You had this 3 months and the deadline was passed or about to be passed. How would that work with you?
Well, planning. If the property needs planning, the planning has to be in place before we even complete on the mortgage. So if you are if you are going to be applying for planning because you're changing the use, say from a C3 to a C4, you need to be making sure that's in place, you know, before you're going really any forward with this, on that side of it. The licensing is different. You know, if it's a purchase, you know, we'd expect the application to be in with the local authority, and you tend to have 6 months to have the license in place, you know, within the 6 months after you complete. But the 3 months is what we state. It is 3 months because it is a light refurbishment. Anything that's going to take longer, you know, that is a heavier refurbishment, which means our product range is not going to be suitable for that. But as I said, we cover it because we can exit it with our day one remortgages if you have to do a different route, you know, on that element.
Awesome. Next one, and again, we're looking, I guess, sticking to that more the intricate details of the deal itself. But does the client start paying 1 month after initial drawdown, or do they have to start allowing the tenant to be in place first?
No, but payments will start collecting as soon as the first initial completion, and that interest will be worked out on the initial advance. Yeah, and then once we've released the retention, the payments will be recalculated, and then they will then be charged the interest at the higher amount that we've released. Does that make sense?
Yeah. Excellent stuff. And there is a question, yes, someone missed this one, but follow on to the previous question. So what happens if something overruns 3 months by error? So again, one of the topics we're seeing quite a lot, and a couple of articles lined up for lenders live around this, which is talking about the shortage or lack of tradespeople and work. So let's say someone's got started, maybe it's a nightmare scenario, tradesperson disappears or isn't fit to finish the roll up, and they have to get someone else in. What do you do in that instance? There's something they can do if they're going to miss that 3 months, but let's say they know a month in advance or even 2 months in advance. Is there anything that you guys can work out with them?
Yeah, you know, this is where that your clients really need to be in contact with us, you know, on that side, because if there are foreseen problems, you know, I don't believe we're draconian to go the 3 months to the date, you know, that, you know, if it's going to overrun by a couple of weeks, you know, it's something that you'll be having conversations with us about. Do you know what I mean, on that side of it? So it'll all be dealt with on a case by case basis.
Excellent stuff. And then, no, sorry, just a quick question over here that we've had to answer this one for all. So if anyone that does want the presentation or wants any info that's been discussed by Andrea, then do reach out to the lender, your BDM, to Andrea, do reach out and be in contact, and yeah, she can, or CHL will be able to share whatever they feel fit to share with you. In case you joined a little later or you missed anything at all, do reach out and CHL will be able to, yeah, share that with you.
Perfect.
Expats. So do you work with, or do you cover for expats who perhaps are using a UK limited company or SPV to purchase?
Not at the moment. Our criteria states that all our applicants have to be fully resident here for the last 3 years with indefinite rights if they need it, say. So yeah, it's something. So it's always a good suggestion because we get asked a lot. I'll put it forward to them because, as I said, we're always looking at ways to evolve our criteria. So any suggestions of elements like that, an area that we're not currently in, is always good for us. So I'll definitely put that as a proposal forward.
Excellent stuff. And again, if you've got any questions, do send them over to us. We'll come up to the last question that I had already. But if you've got anything else, send it over. As we've still got some time over here that Andrea can go over any more. But the last one is a case, and I suppose that's one thing to mention. Actually, if you do have any cases on your desk at the moment you think could fit, sneak something in as we've got the time. But this question, so it's a 3-person limited company buying a Southall 3-bed house for 450,000 in need of modernization, EPCD. So hoping that will fit. But does that sound like the kind of deal, kind of proposition you guys will be looking at?
Yeah, Yeah, not a problem. So limited company is not a problem with us. We can take up to 4 applicants on any of our applications. Limited company, we always have a stance of obviously who needs to go on our application. So if, all directors and anyone who holds 20% or more of the total shareholding needs to go on our application. Anyone who has a minority share doesn't technically need to. So that's a good stance we have out in the market when it comes to multiple people with a limited company. But yeah, I mean, if they're looking at a 3-bed property, EPC of D, not a problem, because we always accept E and above anyway. And it just go down to what type of works they want to do to the property. So if it's, like the light refurbishment, new kitchens, new bathrooms, they know by doing some rewiring and some insulation, it's going to progress the EPC above D to a C and above, then the EPC product is the one for them.
Perfect stuff. Go over some of the registration questions that we had now, but again, I will keep an eye. So if you've got anything live, send it through. One of the questions that we have over here. So are clients able to do further advance once they refurbished the property and it's worth more? So obviously this product offers something already, but can they do anything further advanced, like separately with yourselves?
Yeah, we don't currently offer further advances as we speak, and this product is designed that they don't need to, because we're already worked out the maximum loan on the afterworks value, so it kind of caveats that on this side.
Yeah, excellent stuff. And then anything on or around cladding? So any of the cladding issues that we've seen and works haven't been needed there, anything that you can do or you look at in that scenario?
Well, anything to do with cladding where it requires an EWS1 form, we will consider. We will consider the ratings of A1, A2, and B1. Already. So we haven't changed our stance on that one. We'll still go through the recommended guidelines, from our surveyors and stuff, which is, if it needs it, we'd expect a report to be there, and they're the ratings we can have on that side. I know some of the high street lenders have maybe changed some of their stances around there, but we currently haven't. So
yeah.
So we're still, if it requires it, we need it.
Excellent stuff. And then one that we kind of covered, you mentioned it when you're talking about the going into the loft space, but would build an extra bedroom in the loft space, would that count within light refurbishment? I think you mentioned going into the beams within that.
Yeah, as long as you're not touching the roof void, you can change the storage area up there into a habitable room. That's not an issue, but you can't change the roof line basically on that side. So it can be done. It's just a case of, again, going to your client, what exactly do they want to do? I think that's the question that comes relevant on this one, because their idea of a lofty conversion is sometimes different to what we'd accept. So we always have to just caveat that at the start.
Yeah, great stuff. And then a little more detail. We asked earlier about the minimum property value, and that was at 75,000. Is there a minimum loan amount within this as well? So does there have to be a certain minimum that they need to be improving the property by in order for them to qualify for this?
No, there's no minimum. There's a maximum of, we can't do more than 25% of the purchase price or the current value as the refurbishment cost, the cost of works. But there's not a minimum. So if if they're only doing like £5,000 or something like that, that's not a problem to us. You've got to remember, as we said before, there's a lot of people who do this stuff that have the experience. They've probably got their own team, they've probably got material left over from their previous projects. So sometimes the cost is not actually that much when you consider what kind of works they're doing to it. So we don't have a minimum cost of works, but we do have a maximum, which is 25% of the purchase price or the current value.
Perfect. That's awesome. And then a question that, again, within the presentation we covered, but just to maybe talk a little about the process of this. But can the purchase side of this be used on a standard property where there's going to be a conversion into an HMO under permitted development?
Yeah, I mean, the permitted development is always key to look at, because every local authority obviously have a different rule of what they'd cover under their planning department and stuff. So it's always worth the client seeking that. But yes, we can change a property from a C3 to a C4. Has to be a small HMO, so up to 6 bedrooms on that element, and we can cover it under this product range. That's not a problem. But again, just look at, maybe again ask the client what they want to do with the property. You know, are they changing the internal layout? You know, are they touching anything structural, or are they just putting up partition walls? You know, it's little things like that you asking, getting the full picture at the start helps us immensely when we're discussing it with yourself. So
great stuff. And we actually had 2 or 3 people ask this question. So question around stress rates and the stress testing around that, which again you mentioned at the start that you do your stress testing based on the after works value. Is that correct? So how would this affect any, like, do you then change it if we go beyond that to anyone that's first time landlord, anything different on that basis?
No, our stress testing, whether it's in the light refurbishment range or our whole product range, whether it's short-term lets, holiday lets, or anything else, it's always the same. So what we tend to state is, if you're a higher rate and it's in your own individual name, it's 140. Okay, if it's your basic rate is 125, and obviously limited company is 125, and we always work off the market rent, what the valuer states is the market rent. So that's our calculation, regardless what product range you're in.
Perfect. And then final one out of the registration questions over here. On what basis do you provide investment valuations for HMO units?
Oh, good question. So we have within our HMO and multi-unit block product range, we have 2 products. We have a small HMO multi-unit products, and we have large HMO multi-unit block products. When you're tipping into the large HMO or multi-unit block products, that is when the investment valuation comes in. The smaller range will have just the standard comparable bricks and mortar valuation. The large product range is not just the number of bedrooms. So these would be 7 to 10 on HMOs, and obviously 7 to 10 self-contained units. But they will also cover what we call complex layout. So picture a 5-bed HMO where you've got ensuite bathrooms downstairs as well as upstairs. That's what we call a complex layout. So that will be put under the large products, which will have then the investment valuation. Same with multi-unit blocks. They're not all uniform 1-bed flats these days, are they? You can get hybrid multi-unit blocks where you've got, say, 5-bed HMO with a 1-bed self-contained unit, you know, underneath. You know, that's what we call a hybrid. Again, that would go under our larger HMO multi-unit block, like complex range, which again would have an investment valuation. But anything to do with those, you know, I would strongly always recommend speaking to us as your BDMs, whether it's Mil, myself, or Paul. You know, let's make sure that you put in the right property on the right products, you know, at the start, so you do get the right valuations.
Perfect. Great one there. Thank you very much for that. That is it from the questions that we've had live and also through the pre-registration. So thank you all for sending those across, and thank you all for attending as well. Been a really, really informative session. Thank you very much for that, Andrea. Appreciate you taking us over that. Great product, fantastic proposition. And like I mentioned at the start, from experience, CHL, I know, do a great job with their hands-on underwriting, case management, all the way through as well. They're a brilliant team for that. So do utilize them. If you haven't used them yet, give them a go, give them a try. And definitely this kind of product in this day and age is becoming more and more important, isn't it?
It is,
So,
definitely.
Definitely want to use. In terms of us, what you get from us, you will get your CPD emailed over to you. So your certificate will be emailed over to those that have attended the full session today. Those will be sent straight through. If you haven't already, or if you aren't currently on one, then do take up the free 30-day trial that we offer, and test out the system, see what it's like, and see if you get any joy out of that. But other than that, thank you all for joining and tuning in today. And again, thank you very much, Andrea, for your time.
No problem. Thank you.
Great stuff. Thank you. Bye-bye.
Bye-bye.